Well, hello, everyone. Very good morning, good afternoon from wherever you are connected. Welcome to ATA Insight webinars. My name is Sheetal Shamdasani. I am the event director for Energy Storage 2024, and I will be moderating this session today. We're actually going to be talking about a very important topic today, which is how to get your energy storage project financed in Spain. And we actually have some key experts who are from, let's say, from all around the globe. They are experts in the field for different markets, and we'll be hearing a few insights from them today. We've actually got Tomás García from JLL, Nancy Lu Wang from Octopus Energy, and Javier Lamo from Marathon Capital. We're connected from Madrid today. In fact, I'm based in Madrid right now in Spain. Please do let us know where everyone else is connected. If you see on the right, you have a little chat. Let us know where you're joining us from today, and also do not forget to use the Q&A box down there so that you can ask all of the questions. So without further ado, I'm going to let Tomás introduce himself first.
Hi, good morning, everyone, and thank you, Sheetal, for giving us the opportunity to participate in this webinar and for the introduction. My name is Tomás García. I head up JLL's Energy and Infrastructure Advisory team for Spain and Portugal. We are financial advisors specialized in M&A transactions and financing, and I will explain later, we do have a significant experience in battery storage projects across Europe, also in Spain.
Perfect. Nancy, would you like to go?
Sure. Hello from cold and chilly London to everybody. So joining from the UK. My name is Nancy Wang. I'm a senior investment manager with Octopus Energy Generation, the generation arm of Octopus Energy Group, which is UK's second largest energy supplier. I primarily cover the UK market, and UK, as we all know, is one of the sort of the first movers in terms of adopting utility scale battery. We'll look forward to sharing some of the information and insights that we have from on ground with you all.
Perfect. Lastly, Javier.
Yeah, hello to everybody. Good afternoon, good morning. This is Javier Lamo. I am the country manager for Spain for Marathon Capital, which I will later give some more information, but Marathon Capital is an independent US investment bank focused just on clean tech, clean energy, and energy transition. And basically with a lot of presence and a strong presence in the US, which is one of the most advanced markets in what is battery storage. Also, what I can tell you is before joining Marathon Capital, I've been an investment banker, but also I've been as part of an IPP because I was for 2.5 years part of Eolia Renovables, one of the biggest IPPs in Spain. And there, although we didn't end up doing any battery, we did analyze it. So also can bring slightly that perspective from the final user too. So thank you very much to ATA, and hope that we have a fruitful discussion today.
Thank you so much for joining us today. So as you all know, Spain has some interesting, let's say, purposes until 2030, I believe, that they have to get 22 gigawatts of energy storage, which means they have to ramp up their game pretty quickly. So obviously we heard a little bit about all of the help, I mean, like the subsidies that we'll be getting from the government. However, those will not be enough for these projects to go ahead. So we're going to be looking at what we expect for Spain, and obviously comparing it a little bit with what's happening in the other markets as well. So I'm actually going to ask sorry, Tomás to show his little presentation. And we will follow with Nancy, then Javier, and then eventually we'll go into the questions and answers so that you can ask our key experts today all of the questions you have.
Yeah, I take that you guys are able to see the presentation now. So yeah, thanks, Sheetal. Let me, in the next few minutes, share with you some of the insights we are observing around potentially financing battery storage projects in Spain. Okay, just a disclaimer there. So I'm gonna say a few words about who we are and then talk about financing best projects in Spain. As mentioned, JLL is financial advisors. We do transactions, we do capital raise, we do debt financing, as well as consulting PPAs. We are about 40 people in 6 different offices across Europe, as you can see there. And since 2010, we have a significant track record on energy transactions, renewable energy transactions. In particular, in the battery space, in the best battery energy storage systems space, you can see here that we have closed. This is the number of transactions we have actually closed as a financial advisor so far. So first in 2017, and this year we have either active or closed already 17. So in total, we have actually closed 36 transactions. And we have 12 battery transactions ongoing. So I think we do have a good perspective on this market across Europe and also in Spain. Okay, first of all, on the storage market in Spain, this chart represents the targets that the Spanish national plan called PNIEC. There is a current draft that it's actually under consultation that defines. So today, we have about 8.3 gigawatts of storage. As you can see, most of it is hydro and concentrated solar power, CSP. There was a previous draft issued 2 years ago of this plan, and the current draft targets around 9 gigawatts of battery storage projects in Spain. So yeah, by 2030. So yeah, pretty attractive market in Spain. I just wanted to make a point on the regulation because I oftentimes hear that people is waiting for the regulation. I think the regulation to enable a battery market in Spain already exists. So people, developers, installers, investors can develop their battery projects, can build the battery projects, can operate the battery projects. So the regulation does exist today. A different story is the capacity market, which we will talk about it in a minute. Some of the market trends we are observing, we are very much in discussions with number of players active in the storage market in Spain. So every day we speak to developers, IPPs, banks, investors, funds, etc. So I think we have a pretty good temperature of what's going on in this market in Spain. So some of the things that we are observing is on one hand, on the development side, a very intense activity. So a lot of people developing battery projects. As an interesting data point, there is already 6.5 gigawatts of projects with grid access granted, which is quite significant. And we know there is much more in the queue, in the waiting list, trying to secure additional grid access points. Despite some of the permitting challenges that we are also being reported by local developers, not because of the lack of regulation, but rather because of the lack of experience by the local authorities permitting these battery projects, which is a new asset class, let's say. With regards to transactions, that's our world. We are observing the first battery transactions. We are, in fact, facilitating as financial advisors some of those transactions at the moment in Spain. And we observe a very strong appetite from investors, Spanish investors, European investors, US, Asian investors. So yeah, a very strong appetite. And in terms of capital, on one side, equity providers do believe in this market and are happy to invest and put their money at work, and sometimes also take development risk. However, debt providers, and we will go into more detail in a second, debt providers are more wary. They're still not ready to provide financing, and we will see why. The key, the million-dollar question for a battery project in Spain is, what is the revenue stack? That's really the name of the game. So any battery project as of today can actually participate in 5 different markets. So it has 5 different revenue streams. Not going into details, but essentially the wholesale market, that's a pretty obvious one. So buying cheap power, selling more expensive power at a different hour of the day. And this, by the way, applies for the day-ahead market, the intraday markets, and the continuous market. And then the light blue ones are 4 different ancillary services in which, again, battery projects as of today can already participate, again, without going into details: secondary and tertiary reserve, replacement reserves, and technical restrictions. And lastly, we have, of course, the well-expected capacity market, which is not there yet, but everyone expects it to be approved. In fact, there was a draft regulation issued a couple of years ago, and the ministry has been taking decisive steps towards approving it in recent time, actually. So yeah, these are really the key questions, like, what do you as an investor believe a battery project could generate as future revenues? Now, in terms of financing, as a general thought, banks or any other financing institution will require a number of things before lending money on a non-recourse basis. So I've listed here 6, let's say, requirements, and as you can see, most of them could potentially be fulfilled for battery projects to date. So technology track record, yeah, battery projects have been being used in other jurisdictions across the world, in particular in the US and in the UK for many years. So there is, yeah, that technology track record. EPC contractors, there are plenty of bankable EPC contractors in Spain. Same applies for O&M and asset management. The reputation of the sponsor is obviously very important, but there is plenty of players out there. Risk control mechanism, something that it may be more doubtful, but I'm sure we could find a solution. However, the first and most important one is the contracted, stable, predictable future revenues or future cash flows. In other jurisdictions, these contracted revenues typically come from two different sources, which are, by the way, complementary. So it can be given at the same time. First of all, is the capacity market. And this is a subsidy mechanism that is very popular in other jurisdictions across Europe. So there is capacity markets in many other, there's capacity markets for which battery projects can participate in many countries in Europe, most predominantly in the UK. In Spain, as I mentioned, we do have a draft regulation issued a couple of years ago. And the ministry is taking the necessary steps towards an approval of a capacity market in Spain. Whether that's going to happen next year or the following year, we don't know really. And then from the time it is actually approved, there will be some time needed for organizing the auctions until the first revenues are coming in. So this is typically an auction-based mechanism by which you will be, as a battery player, you will be remunerated in terms of the installed capacity in megawatts, not megawatt hours. And the supporting schemes are typically, a number of years. The draft regulation was 5 years, but in other jurisdictions in Europe, it's up to 15 years. So we're hoping for longer tenors. Of course, this will be factored in by the de-rating factor. As an insight from the UK, in the most recent T-4 clearing price for battery projects, the price was £63,000 per megawatt per year, paid for 15 years. So very lucrative, very interesting source of revenue. The second one is the optimizer's floor. As you know, the optimizer is the company that will essentially operate your battery, and they are very incentivized to maximize the battery revenues, the revenues generated by that asset, because they typically charge you a percentage of those revenues. There is plenty of players in the UK, for example. In Spain, there aren't yet any battery projects in operation. Therefore, the optimizer market is something to be developed. And these guys would typically offer you a profit sharing mechanism with or without a floor. So a floor means that no matter how much revenues the battery asset generates, they will still pay you a fixed amount. And of course, that fixed amount of revenues makes the project bankable from a non-recourse financing perspective. Of course, the bankability of the optimizer and those floors will also in turn depend on the guarantees that the optimizer is willing or able to provide. Again, as an insight from the UK, the floor levels that we are observing are in the 40 to 55,000 euros per megawatt per annum paid, plus 10-12% of the revenues for a 2 hours battery projects. And this contract will be typically between 7 to 10 years. So again, this is what really makes the project bankable. And I'm running out of time, so let me just share with you, again, in Spain, unfortunately, the market is not yet ready for financiers to provide non-recourse project finance for battery project, because we don't have those contracted revenues, but in the UK it is. So I just wanted to share with you some market intelligence on what are the typical financing terms that we are observing for battery projects in the UK. So I won't go into detail, but you have here a wealth of market insights and information. And I think these slides will be later shared with all of you. So with this, I just wanted to show you or to tell you that JLL has recently published a very detailed report on the standalone BESS market in Spain. That's absolutely free for everyone to download. There is a wealth of information, insights, intelligence, and data points in that report. We released it a couple of weeks ago, and we're receiving a very good feedback. So you're free to download that report either by pointing your camera to the BD code there, QR code, or just following that link. Thank you very much for listening to this brief presentation. Happy to engage later in the Q&A, or if anyone is interested, also continue the conversation on a one-to-one basis at a later point. Thank you very much.
Thank you. Thank you, Tomás. That was actually really interesting. I'm pretty sure a lot of our viewers will be interested in more detail. So I'll let everyone ask you questions in the Q&A box, and in the meanwhile, we can move on to Javier.
Okay. Let me share. Okay. Can you hear me? I think so. And you can see also my screen.
Yes, perfectly.
Okay, so I will try to be quicker and to have some time in order for the discussion afterwards, and also because some of the ideas that are in this presentation also have been, first of all, shared by Tomás, which really is good, but because it makes sense that, and really because in this case, let's say the thoughts on how you finance and how the market and what Spain needs for this financing market of batteries, first of all, the battery market to be developed, and then the financing are clear. So that's good, because then there could be ways of action and workaround. So third thing, in terms of Marathon Capital overview, as I initially said, we are a US independent investment bank. We were created in 1999, one of the pioneers in terms of renewable energy. Currently, we are nearly 100, more than 100, nearly close to 150 professionals, investment bankers, and they specialize, as I said, in what is all related to clean tech technologies, sustainable technologies, and infrastructure markets. Okay. And in terms of that, we have, for example, you see there some credentials we have in terms of the number of deals we closed in the last 3 years, which we were leaders. And then in terms of presence and local reach, we have a global reach. We are very active in the US, for sure, North America, then in Latin America also. And in Europe, our London office was opened 3 years ago. And together with Madrid, we cover the whole of the European market. Okay, so global reach and focus, specialization, and independence. In terms of sectors and coverage, we cover all the spectrum in terms of clean tech and energy transition, obviously utility scale, solar and wind, but also distributed generation, storage, clean tech technologies and clean tech solutions, energy vehicle infrastructure, sustainable fuels and hydrogen, which really, that's something in terms very related to what is the renewables with all the hydrogen and the associated products, and also the infrastructure associated with the necessity to electrify and to do the energy transition. In terms of the financial products, obviously M&A and equity capital markets and capital raising, but also debt advisory. We also in the US very specific product, which is the tax equity advisory. We are one of the top 3 leaders. We also have an offtake advisory, which basically is a practice that we advise on the PPAs and contract in the long term, not only for electrons, but also for molecules. And we also do a strategic consulting and global finance. And also to mention that we have an alliance, strategic alliance with Sumitomo Mitsui Bank, one of the biggest lenders worldwide, the Japanese bank, with the idea of together doing more business and helping decarbonize the portfolio and the clients they have. So that's also an additional point. We continue to be independent, but at the same time, we can facilitate and we can help in terms of finding new opportunities from the lending perspective for our colleagues of SMBC. And on this last slide, in terms of who we are, here you see some credentials on deals we closed in the last 2 years, this year and the previous one. And you see that those that are with the red distinction are those which imply a battery, either a battery company or a battery storage project. Okay, so as I mentioned, this is one of our key areas, and we have a lot of expertise, especially I would say, and which I can bring to the table, the point on the US market, which Tomás mentioned initially, the UK, I think Nancy will talk about, and really together with the UK, the US is, in terms of the markets, we always think about one of the most advanced ones. So then jumping to the next section on some considerations, the first slide is here I'm setting some of the markets and how developed they are. You know, in terms of the most advanced, I mentioned US and UK. We will be talking, we've already talked about the UK. Nancy will also talk. Then let's say Italy is a market that it's developing, and then will come Spain and Portugal, the same one, which the good thing is that there are some steps towards moving forward. But for the moment, the reality is that it's a very incipient. Everybody's expecting it's a market is going to come, but really some steps need still to be given. Specifically mentioned on the US, why the US market is so advanced in terms of battery storage and the financing, the deployment, the perspective plans, and also the financing. Well, there are some characteristics that they are inherited or peculiar to them, but I think many of them could be shared. First one I would say is that it's the penetration of renewables, you know. And by the way, for those who are not familiar, the US is not a common market, but basically there are different markets regionally, some of them interconnected, there are more plants, but it is not a single market, and actually each market has its own peculiarities. For example, one where Spanish companies are very present is the ERCOT market in the Texas area, which is one that it's increasing a lot the penetration there in renewables. But for example, there are others are PGM, maybe CAISO, and so on and so forth. So the thing is that BESS and the penetration is very important because the penetration of renewables is also becoming a reality, and it's growing a lot. And that's something that it's also shared with Spain. So that first tick in the box is there. Then also, second point is the fact that many of the conventional generation plants that were used to provide peak capacity, such as the peaking plants, are going to be decommissioned or are in the process to do so. That's something that really in Spain, we'll see how it moves, but for the moment, you know that those plants, especially for those plants that provide the reliance to the system when there's peaks and a specific capacity to match demand, that is not in the table. You know, there's a plan to take out all the nuclear fleet, but in terms of CCGTs, that's not within the idea of the regulator. And actually, there was a very recent news published on that the Supreme Court in Spain allowed Naturgy to decommission for 5 years some plants, and this could have an impact on what is the reliability of the sector. But the difference between the US is that let's say plants that provide that peak demand are being decommissioned, and in order to substitute them, BESS is needed. And that's for the moment not happening in Spain. The next point would be also in terms of what is the evolution of the market. It's true that for the last 2 years, this one and the previous, the prices of BESS have gone up, but it is expected that up to a certain moment, this will improve. Either, let's see what happens with some of these commodities, but this is something common that will affect not only the US or the UK, but the whole of the industry in all countries. Then the following point. So we share that peculiarity, and then the other thing is that what is the supply, the support in terms of the different administrations. You know that in the US is very strong, not only because of the recent IRA legislation, but also there are specific support across the different states, which really provide some incentives and mechanisms to accelerate the deployment of the BESS. Coupled with that, with the fact of the tax equity, but that's something that is common to renewables. Okay, so in that perspective, the US is in a better position than currently what we have in Spain. And then the final thing is the maturity of the supply chain. And in the US, this is more advanced than what is in Spain. And that is something that the good thing is that we are working towards moving that, but it's true that the ecosystem of companies in a bigger country and more developed like the US is always going to be there. But this is something that we should have the capacity to overcome that difference. And the final point, which I forgot, was the financial innovation, and I think that from that perspective, the Spanish financing banks usually tend to be one that really support the different schemes and tend to be one of the most innovative, at least in Europe. In Spain, we have a very developed and very good financing market for merchant in renewables, which, for example, in some other countries, it doesn't happen that way. Okay, so I think there are, let's put in a way, still some things we can work around, but in order to have this market develop and really, obviously, as a consequence, also having more financial availability for the best projects. The next two slides, okay, so what are the financing banks looking when they want to finance via project finance any, let's say, project, not only BESS, specifically here there are some comments, but in general, via project finance. The first one is the visibility of cash flow. What happens currently with the BESS in Spain? First of all, there's no capacity payments, which really those could provide, let's say, a floor and at least a minimum guaranteed revenues, Then second thing is that there's no historical track record of performance, really, as Tomás was saying. There are no BESS installed except, I think, for 40 megas last year. The thing about the recent auctions that have happened will allow that, first of all, some BESS will be deployed in the market, and also the banks will have a reference for how this type of assets will perform, looking at the historical. It's a little tricky because I think that in some other papers and so on and so forth, it's been shown that, and probably Nancy will talk about it, that this is a first mover market, and really the revenues that you could see within the first 2 years of deployment are not the same you will see within 10 or 15 years. And then associated with that, there's not an existing revenue stream volatile and not stable due to market evolution. In terms of technical feasibility, that's also something that it's already proven. Banks usually want technology that is proven. Here is the question, what's going to happen with the ion lithium versus the sodium lithium versus the flow, and what would be the size and the capacity in terms of watt hours and what capacity. In general, when you are financing, you want something that is proven and that really is not going to be given any problems. And that's the reason why the banks require also a technical due diligence couple also, and the same happens with the equity providers. Then in terms of the sponsors, what are the banks looking for? Top quality players, and which are also, if they are experienced in other markets and have some knowledge, is also beneficial. Do we count with that in Spain? Yes, for sure, as Tomás was mentioning. That shouldn't be a problem. And then the final point is that the regulatory stability, okay? In such regards, I think that from a perspective of the financing, when you have a battery which is hybridized, it would be more straightforward because you could look at the project as a whole. And then on the standalone development process could be limited by the capacity, okay? And what does it mean? It means like with the current development process in Spain, the idea would be you should be developing BESS and batteries where there's constraints in the network. But the reality is that in order to do so, you have, and the development process requires doing an application similar to a power plant, which in the end, when the capacity is constrained, there's no more capacity. Okay, so that's something that should be worked around in order to allow that in those more constrained nodes, it's easier to step and to develop new batteries. So then, and I will let Nancy quickly, but what would be in this slide, what the ideal project that the banks will be financing? So in terms of visibility, when we have capacity payments, this will be like the top notch or either subsidies. It like gives an idea of what you are going to be getting, and at least you get a minimum flow, okay? Also, if it's hybridized with existing installation, it could be easier because you could look at the whole of the project when taking into account the plant and also the battery, okay? And potentially the battery could give a potential ticket uplift. Then in terms of technical feasibility, proven tier 1 suppliers, detailed technical report, adequacy of size in terms of revenue, technical for what it's going to be installed, and obviously long-term guarantees. The banks want to make sure that if they are financing, let's say 10, 15 years, there are not going to be any problems. Then in terms of sponsor quality and experience, the thing is that tier one sponsors, and I will include their utilities, oil and gas, big developers, people with big arms, are the ones that, as it happens in the market, are the ones that usually the banks prefer to go, okay? And also if they are experienced sponsors with batteries in other jurisdictions. And then the final is the regulatory stability. So it's important also, you know, that in these capacity auctions, to make sure that the banks will guarantee that there's no escape for the government, and also there's no escape in what could be the potential problems for the scheme to be put in place that could lead to it being withdrawn and then a potential problem. And the takeaway that I want to mention is that what's also associated with the lack of financing? Well, also is that in the end, the capacity that the financial institution have is limited, you know. And currently, there's a huge necessity of that. Actually, I would tell you there's over demand rather than oversupply for new projects to be developed. What happens there is that in the end, banks tend to prefer also things that are already proven, and then, you know, tend to be risk averse. So also that's a potential constraint for the development, you know. And basically this is in a nutshell the ideas, and happy to join the chat and have a discussion with my colleagues. Thank you, and I let Nancy continue.
Thank you, Javier. That was a very insightful presentation. Yes, let's get Nancy going so that we can have a few minutes later for the conversation, for the Q&A.
Sure, thank you to Javier and Tomás. Very, very insightful overview on the Spanish battery market, and I also learned quite a bit about the market. So for me, I think what I'm hoping to probably provide a bit of a comparison is what we see in the UK market and how that may be relevant for the Spanish market. You know, now that investors, developers are all kind of very focused on creating pipeline opportunities and growing these pipeline opportunities. Many of these challenges that we face in the UK may well be materialized in Spain later on. So first of all, very quickly, a quick overview about who we are as Octopus Energy. So Octopus Energy is UK's second largest energy supplier with 6.5 million users. We directly supply to households, businesses, and we have sort of integrated businesses in EV charging, solar rooftop, hydrogen, etc., and so forth. We have a proprietary energy management technology called Kraken, which we license out to utilities companies around the world. We operate in 15 countries, including the UK, which is our home market, and many of the European markets: Germany, Spain, France, the Netherlands, Italy, in the UK, and we operate in the US, as well as in Asia, out of Japan, New Zealand, Australia. We are backed by large institutional investors, both financial and strategic, like CPP, IB, Generation Capital, and the strategic energy companies like the likes of Tokyo Gas and Origin from Australia. As I mentioned, we're sort of a vertically integrated company that spans operations from retail, tech licensing, which is the Kraken software, and renewable energy generation, which is the part of the business where I sit in. We invest and hold and operate renewable energy generation assets across different technologies, and lastly, services, including EV, heat pump, etc. So sort of more retail customer-facing services. If you are in Spain, you may well come across us in your city. In fact, From a renewable energy investment perspective, we own and manage assets close to £6 billion, with generation capacity exceeding 3 gigawatts. So, onto the topic of battery. So, as both Tomás and Javier have mentioned, UK is maybe really one of the first movers in terms of adopting utility scale, grid-tied large batteries, and to date, UK has already in operation utility scale BAS exceeding 1.5 gigawatts, and we have many more multiple folds of this further down in the pipeline. So I would say personally, having been kind of intimately involved in investing in renewables, including BAS, in the market for the past 18 months, the market is extremely active. You see a lot of enthusiasm from investors, developers, and financiers, including commercial banks, including private debt lenders. I'll get to that in a bit in more detail. And as you can see, I think the UK battery market, if you look at the top players, you already have a fairly large number of both publicly listed companies and funds, as well as private companies that are already at scale. So with a few hundred megawatts in operation or very advanced stage of development. So Gresham House is a listed fund, and they exclusively specialize in investing in BAS, predominantly in the UK. So this would be a great source of information if you wanted to look more into that, because they do share a lot of their operational data, the performance of the portfolio, etc., with their investors and with the market. Statera Energy is a large sort of storage solution provider with short duration storage solutions such as battery, as well as longer, medium to long duration storage solutions such as pumped hydro, reserve power, etc. And this company was recently acquired by EQT, a leading European private equity investor, for £500 million. So very sizable portfolio and transaction. Gore Street is another listed fund, Harmony Energy, etc. Zenobē is a private battery companies. So I guess right now, if I compare in parallel, right, UK, which really started on the whole battery journey maybe only two years ago, within a span of 2 years, you see the growth and emergence of a fairly large number of platform companies coming to scale. I think it's a promising sign actually for Spain. If you get into the game early and really good at selecting opportunities and building a good development team, you definitely can. And considering Spain is a very sizable market, very large market, and with high renewable energy penetration as well, a lot of opportunities for BAS, I would say. And this is a topic that two of my fellow panelists have also touched upon, the revenue stack and the relative predictability and variability, of the different components in the revenue stack is quite important to not only your operating and optimization strategy, but also super relevant for financing. So in the UK, where we do have a longer horizon in terms of data points, so this is a chart from a data vendor called Modo. They do battery analytics for the UK. You can see, over the span of say the last 3 years, you see revenue for battery really kind of peaking during from the outset of 2022 to the mid of 2022, when we were at the height of the energy crisis, where battery really kind of took advantage of the market volatilities. And then you see this year, actually, in fact, the revenue has come down quite significantly because I think energy crisis easing, as well as you see a much bigger volume of battery now in the market. So to some extent, kind of cannibalizing and evening out the arbitrage opportunities for batteries. And I think it's interesting to kind of mention in 2022, this data point, Gresham House, as I mentioned earlier, the largest energy storage investor, 33% of their portfolio revenue is from grid services and only 11% from power price arbitrage. And this is at the height of 2022. This is at the height of the energy crisis. So this just goes to show that, I think although in the short term, people may be quite attracted to the arbitrage opportunities from battery, over the long run, you really see you need those relatively stable, predictable or contracted revenue to be underpinning your revenue to make battery investments attractive. And this is kind of evidenced in the fact that, as the energy crisis eases, developers are hesitant to bring merchant projects online where power price arbitrage is the only opportunity. So that goes to show, importance of capacity markets and grid services. When it comes to financing, I think UK may be where lenders have a year or two more experience actually looking at providing non-recourse debt. I remember in Q1 this year when we had a number of investment banks, commercial banks coming in and talk about their products. They're all very keen to do battery, but it was very important for them that there is capacity market payment, which is contracted, guaranteed, and or there is a tolling arrangement or optimization contract with a floor pricing, which gives you that downside protection. However, in Q4 this year, I think two weeks back when I was at the National Grid conference and had spoken to a number of industry players, private lenders as well as commercial banks have kind of graduated and got more comfortable in the fact that they're willing to provide financing for pure merchant, not pure merchant, but tolling arrangement with no floor pricing. So they no longer require floor pricing. Obviously, there'll be a kind of adjustment on the debt service coverage ratio to protect the downside, but lenders have indeed kind of got more comfortable to bankroll zero floor pricing optimization projects with such tolling arrangement. And maybe a quick comment as well on the optimization contract, because I think this both of my panelists had mentioned this. This market, I think it may be still emerging, evolving in Spain, but in the UK, it has been, operating for a few years. And we really see the optimization market, although there are many players, but you see two tiers of players. You see a tier of people with very strong balance sheet, essentially. You can really stand behind, provide the collateral or the credit behind the floor pricing that is guaranteed. And when you see zero floor pricing optimization contracts, you then see a much larger group of players who are pure trading houses who with no balance sheet standing behind it. So I think it's also relevant, as a asset owner or operator, which kind of segment do you go with, right? And obviously the former is a more captive market because only a few handful large players are operating in that market, but there'll be obviously the trade-off between economics and price. So moving on, lastly, I think quickly just touch upon, I think maybe a few thoughts in terms of future challenges. Currently, there's 75 gigawatts of standalone battery projects in the pipeline, and it's an astronomical number, right? Really, and many of them are facing a really long-dated grid connection because the grid simply cannot absorb all this capacity within a short period of time. Aurora, a leading market advisor, estimate only 25% of the pipeline projects can actually materialize. So as developers catch up, right, and quickly start generating pipeline, it is really important, I think, the assets are selected based on its own merit. Being it at a good location, easier grid access or cheaper grid access, etc. Otherwise, I think if you look at UK as an example, 2 years down the line, you'll have an oversaturation of the pipeline, and majority of the project may not end up materializing. So that's it from my side. Thank you.
Thank you very much, Nancy. Well, we have a few minutes for some of the questions. I think Tomás has already been really active in answering all of the questions at the beginning of the webinar. So we have a few more open questions. So if you want, I don't know if anybody wants to have a look. So the first one goes, what does proven technology mean? Ion lithium is proven to cause fires. Is this the most used technology? I don't know if anybody wants to go for that.
Yeah, I can answer that. By proven, we mean let's say that when it's not something that it's used or it's a prototype or something like that. It's like something that already has a track record. And really that the financing banks feel comfortable that it's going to last in the long term, that really it could be well maintained, that really the suppliers are companies that have been doing so and so forth, and so on and so forth. The cause of explosions, obviously, that's something that would be in the technical due diligence, and you will have to do some specific, let's say, conscious and take into account that to make sure that you limit the risk. But, imagine it's the same as if you were financing, let's say, a thermosolar project or something like that. That would be something specifically which would be not so important or not important at all, for example, when doing a wind farm analysis. Okay.
Thank you. We have a few more questions. There's a specific one on, so it said there was no mention to the need for benefit of having the long-term service agreements with suppliers. Is this not a material difference to make a project bankable?
Yeah, I can take that one. Yes, it is. As mentioned, banks or lenders would want to make sure that the project operates smoothly throughout its lifetime. A very important part of that is the type of services, O&M and asset management that are provided to the project. So having those long-term service agreements with reputable counterparties or service providers will be key in the financing. So yes.
Yeah, and just to add to Tomás, it's important also because not only that you feel comfortable that it's going to operate well, the same as in other type of power plants, but also to make sure that that there's not going to be a lot of variability in potential cost, that it's already written in the contract. And also from that perspective, if you have like a short-term contract and you don't know how it is going to evolve, bank could think that there could be increases dramatically, maybe because there's an oversupply of potential providers. So also that helps from that perspective. So fully agree with Tomás' answer.
So on this, I would add that, people kind of see battery as a technology that is pretty similar to solar in 10 years ago, right? Where you see increasing large number of players or technical partners or companies and manufacturers coming into play and significantly increasing their production capacity as well as service capacity. So the trend, if you look into Bloomberg new energy finance, it's definitely the cost of battery is on a relatively quick trajectory to decline, and these very large battery companies are expected to kind of also provide quality services. Although you can argue battery has a shorter track record, definitely compared to solar. So we'll see if there may be any kind of risks in the operation, in the O&M portion of it.
Perfect. All right. I'm actually going to go from down this time. There's a question saying the financial terms seen are in the UK a mature market. What type of financial structure could be pioneered in Spain? Higher ratios and lower leverage, or different structures?
I would, again, there isn't any cases yet of best projects finance in Spain, and the data point that I showed are from the UK. So I would expect some similar type of structures being implemented in Spain. Definitely mini terms, 5 to 7 year tenors, probably more expensive debt, probably in the beginning higher DSCRs. On lower leverage ratios, when these pioneers, as you mentioned, start financing, they will be very cautious, applying more conservative terms to their financing.
Thank you, Tomás. Let's see what else. So we have another one asking, how competitive do you see CAES and maybe H2 storage technologies being proven, and long record holding technologies? Will they have an easier access to financing?
Hi, Pedro. Honestly, most of the storage projects that we're observing being developed in Spain are lithium-ion or LFP technologies. We have not seen any compressed air. There is a bunch of hydrogen projects also under development, but that's a different ballgame. So honestly, I wouldn't be able to provide a concrete answer to your question beyond that. Most of what we see is lithium-ion.
Yeah, just to add to Tomás, really the thing is that many times what happens with the financing market is that initially you start with something that there's a question mark. It was mentioned the risk of fires in batteries, but in general, the market adopted, and then all of the different stakeholders followed that trend, So for air compression, I think it was like a year ago or a couple of years ago that in a US company, Goldman Sachs did a big investment, and in principle, that is a technology that also will work. But my understanding is that, let's say, it's not as well as adopted or as advanced as or from the consideration of the market. But I think that in general, that's something that, considering the lack of many of the commodities, there will be other alternatives, and that could be one. Obviously, pump storage is another one with the problems of the development associated with the environmental. But I think that in general, having different alternatives is good, and that one, I think, has a good future.
Perfect. Thank you, Javier. I think we're going to go for one last question. So we have one which says, will early adopters need mandatory to have standards of standalone batteries in order to participate in regulation market or stability market, or they can be used as hybridization plant?
Yeah, no, clearly both. In fact, all the different sources of revenue that I showed can be participated by both hybrid and standalone projects. Even the ancillary services, any renewable plant, actually any plant, any power generating plant can participate in those ancillary services. And there are examples of solar and many wind plants already benefiting from those ancillary services and generating some additional revenues from those ancillary services.
Thank you, Tomás. I actually think we are running out of time, so I don't know if there's any other questions out there. If you do want to leave them on the question box, we will make sure to send it to our speakers so they can either reply through email. I think we're gonna have to wrap it up. So thank you very much for being here today. Thank you for speaking and for the presentations, Tomás, Javier, Nancy. Thank you so much. We really do hope to see you all in March next year, in person in Toledo, because we'll be having our 5th edition of our energy storage event, and hopefully there will be a lot more advancements by then, so we can talk about them in person. So thank you very much once again, and see you in the next webinar.